Hi, this is Ashish Kyal here, and welcome to Elliott Wave News Channel, an initiative by Wave Strategy Advisors. The intention of this news channel, as we weekly discuss, is to understand the Elliott Wave perspective of what is happening on Nifty, as well as to learn new methods in technical analysis that can help us to forecast and accordingly form important trading strategies. So in the previous update, if you remember, I shared across Nifty probably forming and extracting triangle pattern, and the levels we discussed in the previous update on Friday, last Friday, was that cross above 8,900 is going to be important, or a move below 8688 is crucial, which is going to decide the short to medium term trend for Indian markets. However, very clearly post that session, I think Nifty has touched the high of somewhere around 8896, but it has still not crossed about 8900, 8910 levels. And on the downside, also it has protected the level of 8688. So either ways, these crucial levels have been protected. And even after the important event of Fed, which that has kept the rates unchanged, and the stimulus package is announced by Bank of Japan, the euphoria was there only for a day when we saw a huge gap up opening, and the high made was around 8896 post that. Majority of the global markets, in fact, are also moving in a range, and even Nifty has failed to take out the high and has shown some kind of a retracement in today's session. So, in a nutshell, during this scenario, the ongoing pattern remains the same. And like discussed on last time, there is no change as such. And let me show you on the chart a very important red channel within which the prices are contained, and also the important wave counts as per Neo wave, which is currently ongoing. So it is very crucial to look at these important aspects, because if we trade based on the news or the event, you might be expecting Nifty to cross above 9,100 or 200 levels, but that has not happened even after such a positive news. And someone who might be expecting Nifty to show a follow-up buying after just one day of gap up, that has also not happened so far. So let us now just see on the software. Let me share across my screen on the software and show you what is happening with Nifty. Over here, the wave counts are not shown on this chart because that is actually shown in our daily research report. That is shown in our daily research report. So these wave counts are not shown here. And very quickly, let me explain. After an important low formed near 8540, the high was towards the level of on the upside was a wave A. We formed wave B. Then the high near the 9000 mark is wave C. Post that, there was a sharp gap down which completed wave D. And currently, we are still assuming that wave E is ongoing, because as per this count, the price have not even crossed about 8910. So in an extracting triangle, wave E is normally shorter than wave C, which is so far correct, and wave C is shorter than wave A. So looking at the overall structure, there is also a red trendline resistance which is coming near the zone of 8,900, and so crossing about 8,900, 8,910 is going to be very important to maintain a positive bias for the next week. On the other hand, if Nifty fails to move above 8910 and breaks sharply below 8750, that will provide the first confirmation that we are the topping process is probably over and the trend is on the reversal. For now, you should also look at a few aspects like Bollinger Band, and also the sideways trading range market should be adopted. This trading strategy should be of the sideways market, because in case of a sideways market, one needs to sell near the resistance and buy near the support, whereas in case of a trending market, one should buy on the breakouts. So majority of the stocks are also showing some distribution pattern like a topping head and shoulder, and we can see similar pattern even in Bank Nifty. Nevertheless, unless we see a very decisive break below the neckline below the neckline of the HNS pattern, or on Nifty we see a decisive break below 8688, that will provide the first negative confirmation. On the other hand, If 8910 is taken out decisively on the upside, then we are probably going to see the psychological mark of 9000, which is untested in 2016 so far. So we are at a very, very important juncture, and I'm expecting a trending move to start very soon. And this trending move is going to be leading the path ahead for rest of 2016. So that's it from my end so far. And I'll be speaking on an insight into NeoWave at ATMA session, which is scheduled for tomorrow, that is on 24th of September. And we are also planning to conduct a webinar, a 2-day webinar on 20th and 21st of October, which will be on Elliott wave time cycles, and to some extent we will be discussing about how these cycles can be combined and what are the various ways in which we can predict the market. So in case anyone is interested for registering the event for tomorrow, which is on at ATMA in Mumbai, please feel free to contact us. Or for the 20th and 21st of October, anyone interested in registering for the webinar, you can reach out to us on wavestrategy.com or call us on 99204 22202. At the same time, if you have any questions, you can also post it on our discussion forum, and I'll be more than happy to respond back to it as and when possible. That's it from my end so far, and catch you again same time at 4 p.m. next week on Friday. Thank you.